Hi, everybody. This is Maggie Barr with SLV News and Events. I'm here today on our webinar series to talk to you and our audience here about the Small Business Administration loans for homeowners. On the call today, I'd like to introduce Wendy Harris on my team. Say hi, Wendy. She's going to be here helping out with the Q&A section. So if you have questions, you can put them in the Q&A window, and we'll keep an eye on those and get most of those answered at the end of the conversation. Our speaker today is Kevin Wynne from the Small Business Administration, and he is the regional manager for this area. He's also an expert on disaster loans with the Small Business Administration, and these loans are both for homeowners and for small businesses. So I didn't even know they did loans for homeowners. This is all new to me too, which is why we brought him on here. This is part of a series of webinars that the San Lorenzo Valley News and Events Facebook page is hosting to help folks out who have been affected by the fires, either with total loss of their homes or partial loss. So we have other topics in the webinar series, like how to work with insurance adjusters, how to rebuild and design new homes, how to clear your lot. But today we're focusing on financial assistance from the Small Business Administration and how that interplays with other financial assistance from the U.S. government, such as FEMA. So Kevin, I'm gonna let you take over. Would you like me to put your slides up, or did you want to introduce yourself first?
Yeah, I'll introduce myself, Maggie, first, and we'll put them
up.
up.
I can't hear you. I lost your sound. Oh, never mind. I think you're okay. I lost my sound.
You okay?
Okay, go ahead. Sorry.
All right, test. You okay?
Yeah, I'm good now.
Good. Thanks, Maggie. Good morning, and good morning to the attendees as well. And thanks for having me on. What you mentioned is something we hear all the time, is that folks don't know that when there is a declared disaster, the SBA, the Small Business Administration, does come in and offer loans to homeowners, renters, businesses of all sizes, and most private nonprofit organizations. It's the only loan program within the Small Business Administration that offers loans to homeowners and renters. Most of the time, or all the other times, we offer loans to small businesses. After floods, earthquakes, hurricanes, especially wildfires and other disasters, SBA disaster loans are the primary source of federal assistance to help private property owners pay for disaster losses not fully covered by insurance. SBA disaster loans are available, so as I mentioned, to businesses of all sizes, the private nonprofits, the homeowners, and the renters. And when we say not fully covered by insurance, that means that you can be uninsured or even underinsured and not have any insurance at all, and I'll go through that on the slides. But as long as you can register with SBA and fill out an application, we'll be more than happy to see if we can give you a low interest loan. And Maggie and I have come up with the plan, attendees, to discuss what we're going to do. I'm going to do a PowerPoint presentation, and Maggie was kind enough to send me a list of questions that I will answer following that, and then we'll take Q&A from the audience as well. So we'll get started on the PowerPoint now, and here is our slide. Here's our PowerPoint presentation. Next slide, please, Maggie. As I just mentioned, that we're the primary source of federal assistance. So this is with FEMA and everybody else involved. SBA gives or approves over 80% of our home loans to homeowners and renters in declared disasters. We do help the business community as well, but a lot of homeowners come to us. And as Maggie mentioned, you know, people find out about this if there is a disaster, which is unfortunate, but that's just how it goes with disasters. There's a wildfire or a flood, all of a sudden SBA is there to help you. And Maggie was kind enough to invite me on to let folks know that we do help the homeowners and renters.
Now, is there a problem with the header on this? Is it crooked for you guys, or is it just?
It's okay, Maggie. I can handle it. As long as
okay.
I can see it. It's kind of crooked.
It's overlapping.
No problem.
Okay, because I was going to save it as a PDF if you needed me to, and then show it as a PDF instead.
And like I mentioned, there are low interest federal loans to the businesses, the nonprofits, and the homeowners and the renters. Next slide, Maggie, please. So what happens when there is a wildfire or any other kind of disaster? What you're seeing on the screen now is a tornado. The state requested a preliminary damage assessment from the Federal Emergency Management Agency, and SBA participates with FEMA. That's their acronym that I'll be mentioning. The state, tribal it's hit any of the reservations in the state, and local agencies to assess the damage. We want the local agencies to come along because they're the ones that know the communities where the damage has occurred and where we can find out the most damage so that they can be declared for a presidential disaster declaration, which brings in the Federal Emergency Management Agency and grants. Next slide, please, Maggie. So there's also something that the SBA does all by ourselves, and those are called SBA agency declarations. And those are called survey assessments. And that's when the state or the tribals community request SBA only to come out and conduct what we call a survey of what other damage occurred. I'll go into this later, but our criteria is much more lower than what FEMA does when it's a presidential disaster declaration. FEMA, of course, will not participate in this. This is SBA only. Next slide, please. In any disaster, in a presidential disaster declaration, there's other federal agencies besides SBA and FEMA. We have, like, EPA is definitely involved in this one. Down in Santa Cruz, there's a lot of, when a house burns down, there's a lot of toxic liquids and other things, asbestos, that are in communities, and that's when EPA comes in. Generally, HUD, Housing and Urban Development, is involved with this. HHS, Housing and Health and Human Services, excuse me, is also involved. So a lot of the federal agencies come in. FEMA is like the umbrella agency where they'll dictate or help guide agencies to particular areas that need the assistance, which is they're the coordinating agency. The individual assistance, they provide aid for temporary housing, emergency needs and necessary expenses. Public assistance is for the infrastructure. That's for like roads, culverts, things like that that have been damaged in the disaster. Maybe some of the burned out trees and power poles have gone across roads.
Oh, I think we might have lost him there. I'm thinking about the water in Boulder Creek. That's the public assistance we're probably getting help with. Are you there, Kevin? We lost you.
Yes.
We just lost you. You just froze up for just a minute. Sorry.
Okay.
Go ahead. Public assistance.
Okay.
Yeah.
Next slide, please.
Okay.
And the president declares these declarations. The state, after they determine that there's been enough damage, will then make a request to the president if they will ask for the individual assistance program. When that happens, SBA's disaster loan program is activated for the businesses of all sizes, the nonprofits, the homeowners, and the renters. The individual assistance declaration is where FEMA gets involved, the FEMA grant program, which are grants, of course, that do not need to be repaid by individuals that receive them. Next slide, please. And as I mentioned, for those administrative or agency declarations, those are for the smaller ones. An SBA's administrator can declare an SBA administrative agency declaration. We just have the governor of the state will then ask the SBA administrator to declare it. This also activates SBA's physical and economic injury disaster loan programs, which are very, very similar to when they're activated in a presidential disaster declaration. Next slide, please. The administrative disaster declaration, as I mentioned earlier, the criteria is a lot more lenient. We're only looking for 25 damaged homes and or businesses that were surveyed that sustained at least 40% uninsured property damage for each declared county. So that's a lot less than what FEMA is looking for in a presidential declaration. When it's a presidential declaration, as I mentioned, the entirety of the federal government's resources come into a declared disaster area. So they're looking for a lot more damages. I don't know those numbers. It's a well-kept secret, but they're looking for many, many more than 25, I can assure you of that. So when folks have a disaster declaration that's a little bit smaller, they can come to SBA, and 99.99% of the time, we're going to approve that declaration. Next slide, please. And as I mentioned, for the public assistance, that also has to be declared by the President of the United States. When they declare the public assistance, SBA activates our disaster loan program for certain private nonprofits that provide essential services of a governmental nature. And what that means is like soup kitchens, things like that, churches that have volunteer agencies. SBA can make low interest private nonprofit loans to them as well. FEMA is also involved in that. But for the public assistance, as I mentioned, it's mostly for the infrastructure and to get the area cleared so that the normal flow of business traffic and homeowners can get around town or the community. Next slide, please. There's a couple differences in the presidential and agency declarations. In a presidential declaration, physical and economic injury losses are available in primary counties. Now, the primary county, as you can see on the screen, is the green. So SBA disaster loans are only available in the contiguous counties or the counties that abut that primary county in presidential disaster declarations. FEMA, the Federal Emergency Management Agency, does not offer physical disaster loans or any kind of individual assistance to contiguous counties. Therefore, SBA cannot offer their physical disaster loan program to those contiguous counties. But we do offer the economic injury, and those are, as I'll explain later in the program, Maggie, economic injury is for you if you didn't have any physical damages, but you are starting to see a loss in revenue, and they're working capital loans, and I'll go into that later. Now, for the agency declaration, SBA disaster loans, since FEMA is not involved, we offer physical and economic injury losses in both the primary and the contiguous. So you can see the green all the way around underneath the SBA side of that, all are eligible for the physical and economic injury disaster loan program. Next slide, please. And as I mentioned, there's physical damage and economic are available in the individual and the administrative agency declarations. Economic injury loans, there's a variety of other declarations that SBA offers. A governor's certification is where 5 or more businesses have certified that they have lost revenue due to like a bridge being down or a road closure, and the business community is starting to suffer. SBA only would look at 5 businesses certified on worksheets, and we would declare an economic injury disaster loan declaration after the governor sends that up to the SBA administrator. A Secretary of Agricultural declaration is where for droughts and forest infestations of barking beetles in the trees, something like that, where the community is starting to suffer because the revenue of that community is starting to decrease because of the drought or because of the forest infestations. Maybe there's been a cold freeze. We get a lot of those as well. A Secretary of Commerce disaster declaration is for fisheries. That's where if the salmon aren't running. We've had a couple of those over there in Monterey where the salmon aren't running, and the fishermen are starting to see decreased revenue. They can come to SBA. A military reservist declaration is where the primary member of the business is called up to assist in the armed forces. And we could also make an economic injury disaster loan declaration for that particular business. Next slide, please. As I mentioned, when the governor certifies that at least 5 small businesses in that area have suffered substantial economic injury, they can apply with SBA. The Secretary of Agriculture is for the specific primary and contiguous counties for those agricultural. Mostly the droughts. 95% of the Secretary of Agriculture, Maggie, are for drought declarations around the United States. Next slide, please. And the Secretary of Commerce are generally the fisheries declarations, and the military reservist, as I mentioned, is an active duty call up for the military for the owner of the small business may apply for that economic injury disaster loan. Next slide, please. So as I mentioned, they're available for physical damages from the declared disaster to non-farm businesses, homeowners, renters, and private nonprofit organizations. Generally, the farm businesses go to the United States Department of Agriculture where they can receive disaster assistance from the USDA for any kind of farm kind of business, their fields, tractors, things like that have been all that have impacted in the disaster. as I mentioned, 80% of SBA disaster assistance loans go to homeowners and renters. Next slide, please. And economic injury disaster loans are also available to small agricultural cooperatives, small businesses engaged in aquacultural, and most private nonprofit organizations. And those working capital loans, they're even if the businesses don't have the physical damage, have any physical damage, but what they are is they're not loans to replace lost revenue, they're loans to meet the working capital needs, to keep the notes payable paid, to keep the employees employed, to keep that business functioning through the disaster recovery period.
So this is what's already
Next
been
slide.
happening with COVID, right?
Yes, exactly. And we have done $33 billion
Yep.
in loans to small businesses, Maggie, in California alone for the COVID-19.
Wow.
Just phenomenal. We also did that grant program as well.
Yeah.
Next slide, please.
My husband's business got a COVID loan that really helped out a lot. So.
Good. And Maggie, just to let you know, I'm not really focusing too much on that, but I did want to let people know in California, they still have until December 21st to apply for COVID-19 EIDL assistance.
Okay.
It's good. You know, it's 9 months, and I'll go over that in this thing, but that's good that he got a loan to help.
Mm-hmm.
Here's our loan limits, Maggie, for the business loans, for the businesses and private nonprofits. For the physical portion of it, it's $2 million. Those economic injury disaster loans, which we've been talking about, also $2 million, up to $2 million. Any combination of physical and economic injury, the maximum amount is $2 million. For the home loans, and these are for the primary residents, secondary homes aren't allowed in SBA disaster declarations, nor does FEMA also not cover primary or secondary homes as well.
I didn't know that.
So those are up to $200,000. Yeah, and that's kind of unfortunate because there's a lot of secondary homes up in these forests, you know, that are being affected by this. And hopefully those folks have insurance because they're not covered by any kind of federal disaster assistance program.
Oh, I didn't realize. Yeah. Okay.
Yeah, the homeowners and renters can get up to $40,000 for the repair or replacement of their personal property. And we describe the personal property as anything that you can carry out of your house at the time, anytime. We also cover automobiles as well, Maggie, and they can get that low interest rate. If their automobile got burned up, they can also get a low interest rate. And you'll see the rates here coming up.
Yeah, I've heard that some insurance companies aren't covering work computer equipment if it's more than a certain dollar amount. Like my husband has a computer business, and we work out of the house, and so all of his computers equipment wouldn't have been covered. But it sounds like that counts as personal property, right? So might be able to work it out through.
By all means.
Yeah. Okay.
By all means, Maggie. Anything uninsured or underinsured, up to $40,000, and we have loss verifiers that are doing the verification of the disaster damaged property. But yes, that'd be considered personal property.
All right. And then the mitigation, it says business, private. What is that? How is that different?
Private nonprofits and homeowners, they're all eligible for mitigation. What that is that if we will offer 20% or more, 20% of a verified physical damage of a loss, but that's to put on a roof that is then fireproof roofs. If it's been a flood, we'll give retaining walls. If there's other floods, we'll put sump pumps in. Those are mitigation measures to prevent the future loss of any of that kind of disaster. When it happens again in the future, you're then covered.
So that's
a lot of folks
on top of the other 200. So I guess that could be a total of 400,000 if you took advantage of both of those.
Yeah, well, no, if they get 20%, say they had $200,000 in losses, if their house totally burned down, they could get $40,000 in mitigation measures additionally for the loan help.
Right.
So it prevents it in the future.
Okay.
It's a great little program. You have to be approved with SBA, but it's still good.
Okay.
Now our insurance requirements, we want you to maintain insurance after you're approved for the loan. Hazard insurance, of course, is if you had a fire, we're gonna request that you do have the fire insurance going forward, flood insurance, is for properties located in special flood hazard areas. Those are for down like in New Orleans and Houston, areas like that that need that flood insurance.
Right, and this is not, this isn't talking about insurance on the past claim. You're talking about the future going
Yeah,
forward.
yeah, just for the SBA loan, yes.
Okay. Are you going to talk about how if you already have an insurance claim that the SBA only covers the difference between what insurance covers and your total loss?
Right, that's the uninsured or underinsured portion. So if
Right.
you had $200,000 in losses and your insurance company only covered $100,000, you would be eligible for a $100,000 SBA disaster assistance loan.
Okay.
That's how that works. So we don't duplicate benefits from the insurance company, nor do we duplicate benefits from FEMA. So anything you get from us, would be less any insurance you've received from your insurance company.
And how do you know what FEMA is going to give? How do we figure that out? Are you going to cover that too? Like if you're getting—
Yeah, I can go over it now. What FEMA does, like say you get $30,000 from FEMA, you had like $200,000 in losses. You get $100,000 from your insurance company. FEMA authorizes a grant of $30,000. That means you would be then eligible for a $70,000 SBA disaster assistance loan. FEMA and SBA, we work together so that we don't duplicate each other's benefits.
Because I heard that FEMA won't tell you what they can give you until after you apply for the SBA, figure out what that loan's going to be, then FEMA will tell you if you cover the grant. Is that right? The sequence?
No, no. FEMA works separately from SBA, but they do recommend the applicants to come over to SBA.
So how does FEMA know what SBA is not going to grant? What SBA loan, you know what I mean? Like,
Yeah.
It's a chicken and egg problem. First, you have to apply with the SBA first to see what you get. And then that's the only way FEMA will know what the SBA won't cover.
Well,
right?
what you do is you apply with FEMA first, and then they authorize what they're going to give for you. And it works hand in hand. So you apply with FEMA. If they say, well, we're going to give you $30,000, and in the meantime, you've already applied with SBA, we're then going to deduct that from our offering of a loan to you.
Oh, I thought it was the other way around.
They're separate from us, but we work hand in hand to get the homeowner and or renter back up and running again.
That's better.
So we don't wait for what.
Yeah. Okay. Yeah, that's better.
We don't wait to see what FEMA does.
I thought someone told me that FEMA would not give them a grant until after they tried to get the SBA loan and failed. That's what
No.
So that's good news.
Yeah.
That's what's happening.
Yeah. So, and that's one of the first things in disasters, Maggie, are rumors. So the key thing is to apply with FEMA and just follow the path.
Yeah.
And they'll tell you what they can do for you. They're going to probably send most of the folks over to SBA to apply for a loan, a low interest disaster loan. Fill out the application. If we decline you, we send you back to FEMA. But let the process work out. Don't listen to what other people are saying that FEMA does this and FEMA does that. Talk to customer service reps with FEMA. Talk to customer service reps or people like me with SBA, and we can explain the process and encourage you what path to go on and where to go.
I would much rather have free money from FEMA than have to take a loan out, right? So
yeah,
most people are going to
recognize that.
Yeah,
we recognize that, and in fact, I think FEMA is giving out in grants. Each year is different, but from up through just yesterday, it was $35,500, which would be a grant. Now, you're not going to get that much from FEMA. Very few people get that max grant. What FEMA says is the most people are going to get, the majority of people get is $4,000 to $6,000. But get whatever you can from FEMA in terms of a grant, because of course it doesn't have to be repaid. And SBA recognizes that folks want grants. We have no problem with that, but our loan levels are much higher than FEMA. We give $200,000, as I mentioned, for the primary residence. I'll show you the interest rates here later, but it's a program that works for the best interest of the homeowner or renter or business owner to get them back up and running again by working with both FEMA and SBA.
Right. Okay.
And if you have any questions, by all means, just keep asking them. It's no problem, Maggie. There's only 3 requirements. SBA recognizes that folks have been in a disaster. So the eligibility requirements are the damaged property must be in a declared county. Are you guys in Santa Cruz County, Maggie?
Yep, Santa Cruz County.
Okay, so you guys have been declared, so that's no problem there. The applicants must have a credit history acceptable to SBA. What that means is that we're a direct lender of the federal government. Therefore, our credit underwriting criteria is a lot more lenient. We don't go outside house. We do the loan in-house. We service the loan for the full 30 years. Our own loan officers do the underwriting criteria. So it's a lot easier because we recognize disaster applicants. It wasn't their fault that the disaster came and got them. Like I said, the credit history must be acceptable to SBA. It's to no other person. And repayment ability, that's the big thing, Maggie, is the repayment to repay the loan, if they can show that. And we recognize that if they did lose their job in the disaster, that they're going to find likely employment within the next year. So we take that into consideration.